Traders, do me one quick favor. I just want you to imagine basing your entire trading career on a random line on your chart. Crazy, right? Well, as you know, you don't need to imagine it because that is actually what everyone is doing. And quite frankly, it's ludicrous. Luckily for you, I'm going to show you that's not how it's done in a professional trading environment. In fact, the complete opposite is done. So let's go. Okay, so what we have here is the E-mini S&P 500. Doesn't matter what market you trade, they're all correlated, interconnected, as I've said in many videos before. What I'd actually like to do, obviously a lot of this, as I said at the start, very different to what you might used to be seeing, is let's just pause it here, right? So we can actually take a step back and have a think about what is going on here, because obviously a lot of this might be completely different to what you used to be seeing. Now, firstly, just important to point out, obviously it is my live account here. So you are going to be seeing a live trade that I actually took just today. So you will see that. But before we do that, we need to really just break it down a little bit and understand what exactly is going on. So a lot of traders, I think, overcomplicate things. Keep it basic. Like I said, a lot of the lines on your chart actually are just distracting you. When you rip all of that away, can you see nothing? No lines. It becomes quite clear we're in a range, right? So very clear range that probably want to play back into it, right? So obviously we need to figure out exactly where do we want to get in, right? And timing is everything in this business. Just get rid of some of these lines for you. Timing is everything in this business. So obviously we need to work out exactly where should we enter. Should we enter up here? Should we enter there? You know, should we wait for it to come down a little bit, and so on and so forth. So a lot of that can you see when you've got random lines on your chart. And there really isn't a better word for it. In fact, I can think of a lot of worse words for it. That's being polite. How are you going to tell, right? It's just getting in the way. Here you can see it's a nice clear view. You've got actual buyers and sellers here, and then you've just got a clear, clean chart in front of you there with the volume profile, which I've talked about in previous videos. Again, just very basic, looking at where actual buying and selling took place. So we can see previous buyers were fairly strong, coming right up into the highs over here. Probably retail or inexperienced traders getting a little bit excited, wanting to play the breakout and so on and so forth. So that's why you tended to see a little bit of buying coming in. What I want to see, rather than just going with the first bout of selling, which again, inexperienced traders might do, is I want to see the reaction when we come back to, you know, where there's potentially a lot of these buyers that could get trapped, right? What do I mean by they could get trapped? Well, as we come back up to here, I want to see what the reaction is. Are they actually going to continue buying, or are they going to start taking some profits and getting out of it because they changed their mind? So obviously that sort of behavior, how are you going to see that unless you see the raw data in front of you? So let's hit play now. It's quite a long intro there, which I think probably gave you a good insight into why I'm doing it. Rather than me just playing it out, I want you to understand why I'm waiting for the market to come back in here. As I said, it's these buyers. We can see on the delta below, they're not particularly strong, but they are there, right? They can't hide their intent. So you're really doing yourself a disservice if you've got stuff on your chart that isn't showing you this, because you're trading blind, right? So as you can see, the market's just moving here. I'm waiting for the market to come back into this area. I want to see what these buyers do. It's like any business, you know, where previous buyers have been. If you run a business, you would test it. Let me go back and put the prices there and see how the market reacts to that price, right? So that is all I'm doing. It's very, very basic. This is what all professional firms are doing, treating it like a business. So you can see the market's come up into this area. I'm waiting to see what the reaction is. Fairly simple to see an aggregated sort of picture there. And this is more kind of the granular picture, which obviously you can look at on a dome, a little bit more advanced. But anyone can do it. Just takes, obviously, like with anything, a little bit of practice. So you can see the market's coming off. It's not really having appetite to push through. Can't see much buying. Now you can see, did you see that big amount of selling, an imbalance of selling? Let me just pause the video here. Imbalance of selling in this area. Can you see? This is what I'm really looking for all the time, is unusual patterns. in buying and selling behavior. You would do the same, right? Amazon are doing the same. eBay, obviously buyers and sellers on eBay are doing the same. And more general businesses like Amazon, Microsoft, or even local small businesses, when you're setting prices, let's say you set the price over here, you're looking to see what the reaction is, anything unusual. So can you see this sticks out like a sore thumb straight away? 294 sellers on the bid, they've got aggressive, and they've actually come in and hit the bid column. They've got quite aggressive, and you can see that it sticks out there. Hopefully you can see that, which obviously amongst other things gives me the little push to put real money behind this. So you'll see me now take a short position on the live account. There you go. Can you see it just got triggered? You can see it here. There you go. Short position taken. So hopefully you can see how different that is. The way, the sort of things I'm looking at to get into the market, very different to what you might be used to seeing, but it's very analytical. It makes sense, right? It's kind of like what you would expect in any successfully run business is you're analyzing buyer and seller behavior, so you can then transact and take advantage of that. None of this random stuff that we see that obviously tends to be completely worthless, let's be honest. I'm trying to be polite. I think of a lot worse words for all those indicators that people use. So you can see I got a little bit more aggressive, just as we saw more unusual seller behavior over here. So what I'm going to do is I'm just going to forward this and let it play out. You'll see the market does go and test that area again, and then we start to come down again and we break down, and you'll see that gives me confidence to add to this position. Okay, so you're going to see it there. Do you see that? Got straight back in. Okay, now I want you to see this stuff. It's not random. It's very, I said analytical before. It's very well thought out. Just like you would in any business, you know, if you want to succeed, you've got to have a very good business plan in front of you. So my plan was premeditated on these buyers that we saw over here, right? As we came back into that area, I want to kind of get a feel for, do those buyers have appetite to continue going up, or are they looking to exit their positions, right? So as we saw, the market came back up here. Any buyers in that area are clearly looking to exit their positions, right? Because when the market came in, we saw aggressive selling coming into the marketplace. So for me, that gave me a good plan, right? Obviously, I don't know 100% is it going to succeed or not, but it gives me a nice little plan in place and also good risk reward, because I know as soon as we start breaking above here, buyers are back in control. So I kind of have that sensitivity area, you know, like the area which will tell me whether I'm right or wrong. And that's one of the most difficult things to kind of learn and put into place as a trader, because you're looking at the wrong tools, right? When you're looking at the right tools like Orderflow, buyers and sellers themselves are telling you. Who better than other traders to tell you where to get in and out? So what I'm going to do is I'm going to let this play out. You'll see that the market very quickly starts to go in my favor, because other professional traders will be seeing this, right? You can see it's open. This is all open. It's exchange traded volume. None of that over the counter nonsense that I see people trading. This is exchange traded volume, so it's visible to everyone, which is actually a good thing, because I know other people are seeing this. So you can see here the market playing out. What I'm going to do is I'm going to just forward it to the exit, and I'll tell you why, because this took about 45 minutes to play out, okay? And people use the word scalping. It's a very broad term, okay? People think of scalping as just being short term. It isn't. Maybe getting your entry can be microscopic, you know, obviously spending a few minutes waiting for the right order flow and deciding whether to take the trade or maybe not take the trade. But ultimately, the actual exit, you can leave the market. You can see I haven't even reset my depth of market here. I've just let it play out. This took about 45 minutes. Okay, I had my predetermined exits that I had over there, which was, I think, near the previous lows. You see there, near the previous lows. So some exit there, and then I held. So I had, 2,600 in the bank, and then the rest of it, I just let it play out till the exit there, final exit there. You can see I was trying to go for lower prices, came back, and I just took the exit for 3,000 and $3,075. So not a bad day's work, but hopefully that's a lot clearer to you because it is actually based on some proper deep analysis. So hopefully you found that useful. If you want to change the trajectory of your trading career from using random lines to using what professionals are doing, which you can see is very different. Watch this video right here to see more institutional trading, the way this business should be done.